So let's talk about the tax refund. Every year, millions of people get super excited about this. It feels like winning a small lottery, or maybe finding a forgotten $20 bill in your jacket pocket, just, a lot bigger. But here's the reality. It's not free money. It's not a gift from the government for being a good citizen. A tax refund is actually your own money coming back to you. You simply overpaid your taxes throughout the year. The government took a little too much from each paycheck. Now, they are just paying you back the difference. It's an interest-free loan you gave them. Think about it like this. Imagine you went to a coffee shop every single day, and every day you gave the barista a $10 bill for a $4 coffee. But instead of getting $6 in change each time, the barista just kept it. Then, at the end of the year, they handed you a big envelope with all your change inside. You'd be happy to get the money back for sure, but you also would have lost the ability to use that $6 every single day. That's exactly what a tax refund is. It's a forced savings account, but one that pays you zero interest for your trouble. The average tax refund is usually a few $1,000s. For most people, that's a pretty significant amount of cash to get all at once. It's tempting to see that money hit your bank account and immediately think about a vacation, or a new TV, or maybe just a massive shopping spree. I get it. The urge to spend it on something fun is really strong. It feels like bonus money that you didn't have yesterday, but that thinking is a trap. It keeps you in a cycle of working for your money instead of having your money work for you. This is where we need to change our mindset. Instead of seeing it as fun money, let's start seeing it for what it truly is. It's an opportunity. All right, so you're convinced. You're ready to turn your refund into a money-making machine. What's the first step? It's simple. Make a plan before the money even arrives. This is the most important part. If you wait until that deposit hits your account, the temptation to spend it will be overwhelming. So decide right now where it's going to go. Open the account you plan to use. Do the research. Be prepared. The first concrete step is to open a brokerage account. This is where you'll buy and sell your investments. There are tons of great low-cost options out there like Fidelity, Vanguard, or Charles Schwab. Once you have your brokerage account set up, which usually only takes about 15 minutes online, the next step is to link your bank account. This is how you will transfer the money. So, where should you actually put this money? Let's break down some of the most popular and effective options. The easiest and most recommended choice for beginners is a low-cost S&P 500 index fund, or ETF. An ETF is an exchange-traded fund. Think of it as a mutual fund that trades like a stock. An S&P 500 fund, like VOO or SPY, holds stock in the 500 largest companies in the United States. So by buying one share, you instantly own a tiny piece of Apple, Microsoft, Amazon, and 497 other giants. You're diversified. You're not betting on one company to succeed. You're betting on the entire American economy to grow over the long term. Another fantastic option is a Roth IRA. This isn't an investment itself, but a type of investment account with incredible tax advantages. You contribute money that you've already paid taxes on, like your refund, by the way. Then it grows completely tax-free. Now that you're ready to invest, let's talk about how to avoid some common mistakes that trip people up. The biggest one by far is trying to time the market. People get their refund and then they wait. They think, the market is too high right now, I'll wait for it to dip. Or they think, the market is crashing, I'm too scared to buy. This is a losing game. Nobody can consistently predict what the market will do tomorrow. The best strategy is time in the market, not timing the market. The sooner you invest, the more time it has to grow. Just put it in and let it ride. Another huge mistake is putting all your eggs in one basket. You hear a story about a friend who made a ton on a hot new stock. So you take your whole refund and dump it into that one company. This is not investing, it's gambling. That company could go bankrupt tomorrow and you would lose everything. Adopt a long-term mindset. Over any 20-year period historically, the market has always gone up.